Hey guys, in this video I'm going to take you through my opinion of the best stock market practice and just give you like advice from my perspective. Well, no, sorry, this is not investing advice. Do your own research. But yeah, just going through my opinion of the stock market and how like a good way to use it really. So first of all, we pretty much all start with this. We like realize our own desire or a need to invest. You can see like you have an income and you get that same income. You can save the same amount per week. The only way you can, like on a regular kind of structure, the only way you can do that is to get a higher paying job. But then like outside of that regular structure, you can start earning money for like on an exponential scale. So you put in potentially less time into stock market investing than you do your regular job, but you can actually earn similar amounts, like depending on what capital you have. So like you can exponentially earn the money year over year. So it might be like this year, the past year I've made $12,000, but next year there might be 24, the next year there might be 48. Who knows, like depending how much money I can get into the market, and eventually that's going to be greater than how much money I earn. So yeah, like there's greater potential in the stock market than there are from regular just paid jobs. So when you kind of realize this, or you decide like this is what you want to do, you kind of create a motivation. You have like a desire to get into stocks, and like that's really important when you're investing, because if you don't have that motivation, then you're not going to stick with it. And a lot of people that don't stick with it end up losing money. They get pushed out in market downturns. They kind of lose the desire to leave that money in there, and they want to do something else with that money, so they don't commit to it and they just pull the money out. So you don't want to do that. You want to be fully like deep into stocks. Like you want to be motivated and passionate about stocks when you get in. Like if you're not at that level, you're just like wanting to have a little dabble, don't put all your money in. Like go small until you're really confident. So research is huge in the stock market. You're going to need to put in a lot of time and effort into it, and like at the start you'll feel like, why am I putting all this money, this time into research when I'm only making a small amount of money? Like my mum puts in $100 into a stock every now and again, and like even if those stocks double, I mean she's made $100. Like it's not a huge amount. So if you're sitting there thinking like, I've done 8, 10, 100 hours research and I'm making like a few $100, like you have to think further along the timeline. Like in a few years that's going to be thousands, tens of thousands, hundreds of thousands that you're making if you stick with it. So that same amount of research, that same quality of research is going to yield you a lot more money. So you want to really research a lot of stock psychology and like the best practice of the stock market. And this is all my opinion. So like if you see this as me saying that this is the best practice, it's the best practice that I see. Like if you guys leave comments or like other ideas, other best practices, my opinion can be changed. Like this is not steadfast. I've only been in the market for a year, so this is just what I've learned in that time. So yeah, stock psychology is actually a really big one. You don't want to be kind of the sheep of the market. You will lose money if you're a sheep. So this is probably one of the key ones that I have not followed. So it keeps cash on standby. So for a while, I did have huge amounts of cash on standby, like almost 50%. But like, especially when you're early in like your investing career, like you see all these gains that you're making, you're like, wow, I could just get more money by putting more in, and you just want to put more and more and more. But like you see it in a lot of the experienced investors, they not so much that they judge the newer investors, but they can see the experience that they're missing. Like personally, I haven't been through a market crash, so I invested at the bottom or close to the bottom of the March crash last year, so I haven't actually held stocks through a market crash, unless you count $40 that I had in my Sharesies account, but I do not. So like this is the first kind of real correction that I've been through. There's been a couple of smaller ones in the past year, but nothing really on this scale for me. And like the kind of the knowledge and experience that it builds up is quite valuable. You can get that same knowledge from like other investors, but it takes hold more when you have the experience. And then obviously, yeah, I know that I'll be investing different after I've experienced like an actual market crash, and I know now that I'm going to be trying to do things different after this correction, because I could have taken better advantage of this correction if I had 20% cash or something. So from now, like I'm going to be trying to keep more than 10% cash. Like if I think everything's undervalued, then I'll go as low as 10%. If I think everything's overvalued, then I should go as high as 30%. This can be difficult, especially like for me at the moment. I'm renovating my house, and I need my cash for that, so I can't build up a cash buffer from my income, which means to get a cash buffer I'd have to sell stocks, which no one likes doing. Not if you're doing the stock psychology properly. Like you don't want to sell. So my theory for this is I'm going to need to get a higher paying job so I can increase my cash position on like a fortnightly basis, So there's a few different ways that you can hold cash. You can have it in savings, which is probably the worst place to have your money. You can leave it in your brokerage, but then it's really easy to spend it. I mean, it is the best place, so you can take advantage of the deals. Like, say, if you had brokerage cash in your brokerage like yesterday or today, like there's been some really low intraday prices, and you could have taken advantage of those. But if you were trying to transfer out of savings, yeah, you probably have like a 24 hours before you actually get it in there, and yeah, it's a bit inconvenient. Home equity line of credit. So I think there might actually be a different name, different colloquialization for that in New Zealand. But it's basically you go to the bank and you say, hey, I'd like to have the potential to take more money out on my mortgage. And so they like open you like an account. It's like using a credit card on your home loan. So you get the interest rate of your or similar to your home loan. It's like the floating rate usually, but it's like a credit card where you can draw the money out whenever you like, so long as you pre-organized it with the bank. So you have like money you can draw on at a low interest rate, but while you're not drawing on it, you're not paying any interest on it. And then similar to that, you've got an offset account. Obviously, these two only apply for people who have property as well. An mortgage offset account is essentially pretty similar. So you have your mortgage of like, say it was $200,000 on your mortgage, and then you have a mortgage offset account, which is like kind of like a savings account. Say you have $100,000 in your offset account, they basically treat that as you've paid off that on the mortgage. So you'd essentially be paying the interest on a $100,000 mortgage instead of the full $200,000 because of that $100,000 sitting in the offset account. So then you can go into that offset account and spend that money at any time you like, but then you'll be paying interest on what it's now not offsetting in the of the mortgage. And lastly, it's not actually technically cash, but undrawn margin is another way you can take advantage of the market. It's not so good for other things, like if you have an unexpected expense in your life and you've got cash on standby, then like in a savings account or something, then you can use that for that. But if you've got undrawn margin in an account, like that doesn't help you with anything else except for a correction in stocks or a crash in stocks, where you can then draw that margin. So this is one that I use for crypto. I have all of my crypto assets, most of them in a margin account, but I have equal equity to like stock cryptos that I bought. So like a 1-to-1 ratio, but I can leverage that to 3-to-1 ratio. So I would never do that because that's 3-to-1 is huge. But essentially leaving all those cryptos, all those assets in that one account, the margin account, means I can draw money, like loan money from the brokerage, Binance. And yeah, if there was a huge crypto crash or even just like a small dip, then I can take out some margin and invest it into some of the beaten down cryptos, which I have done in the past, but I'm not leveraged at the moment. Yeah, so that sums up keeping cash on standby. You want to do it. So timing. You should never try and time the market is the thing you always hear. But when you actually talk to investors, like experienced investors, like there is caveats to that rule. So I've put there timing only a little bit. So you hear like different colloquializations like timing into the market and timing out of the market. Timing out of the market is dangerous, in my opinion. Like even if you see that something's overvalued in the market, like you can sell it and then watch it go up, like an infinite amount basically. Like there's no way to tell when it would stop, just because it's a stocks or a market's traded at specific multiples like previously doesn't mean it will in the future. Things change. Like you might not know something, and basically the stocks can do anything, and you shouldn't try and like time out of a stock. But that said, like you can kind of do it a little bit. So if you see like the whole market is quite overvalued and it's flying quite high, like you're really good at identifying that, you can like trim some profits and stuff. I mean, obviously you can do whatever you like. If you want to pull it all out and try and time it, you can do it. But in terms of what I think's the best practice is you shouldn't try and time out of the market. Timing into the market. So there's been some studies done around like what the best way to get your money into the market is, and basically the winner is consistently investing, just like set and forget, like automatic payment or something, and just put it into the same stocks or whatever, week after week or fortnight or however often you get paid, because you're basically, well, it comes back to the saying, time in the market beats timing the market. So essentially what that's saying is if you put your $100 in every week, you'll be better off than if you save up that $100 for 10 weeks and wait for a 10% correction or something, or 10 months and then wait for a little correction. You're going to be better off not waiting for those dips. But that said, you should also kind of try and time into the market a little bit, in my opinion. Don't buy on a huge red day. Like if the stock you're looking at has just gone plus 30% in a day, like there's no guarantee to it, but the likelihood of there being a red day the following day is so much greater. Like the higher a stock is when you buy it, the more downside potential it has. So if you wait for a red day, like preferably a big red day, you can get better returns, but then don't wait too long, because if you're waiting weeks, months, then you will miss out on that time in the market, and you'll miss out on opportunities like that. But I mean, red days happen fairly often. There's usually at least one a week, even in a bull market. Just wait for a red day. And it says don't buy at all-time highs. That's kind of one of my rules. If I see a stock's at an all-time high, I will try and avoid it. But then again, there's also caveats to that. Like if it's a super high conviction stock, like if you look at the best performing stocks in the stock market, they can spend like 2/3 to 3/4 of all the days in the year at all-time highs. So obviously then you'd kind of be incentivized to buy at all-time highs. But that doesn't work for every stock, so you have to be careful with that one. There's no way to be certain about any of this. You can only do your best and then accept what happens, really. If it goes up, great. If it goes down, oh well, buy some more. So this one, there are always deals out there. Find them. A lot of people I see that are beginners to the market, they always talk about the last best thing, and they say things like, imagine if you had invested in Bitcoin like 2 years ago or something, or even start of this year, what if you had to put your entire net worth into Bitcoin? It's like, great, you can retrospectively see numbers have gone up, like, cool. How about you stop focusing on things that have already run and try and have a look out for things that have yet to run? So Tesla's a huge one. It's also tricky. Like, I don't want to talk down about Tesla because they're a great company, but like a few people that I know were talking about buying Tesla at like 800 or 900. I know people who did buy at 800. I know people who bought tens of thousands of dollars worth at 800. And there was better opportunities in the market at that time, I feel, but they kind of weren't looking at them. They were going for, like things they've seen that go up. I've heard so many people say like zoom out on a graph, look at the 1 year or the 5 year and be like, oh, well, they've always gone up, so they're probably just going to keep going up. Yeah, I did that with A2 milk when I first started out. Yeah, it's always gone up. It'll just keep going up. And yeah, I halved my money on that. I lost 50%. So I lost about $500 to $700 on that. Lucky I was still using fairly small numbers back then. But yeah, it's not great to just buy because of a good graph. So yeah, find the good deals that are out there. Don't chase the stocks that are flying high. And when you've done a bit of research, you've checked out the psychology of money and all that, you'll probably start to form your own method to the stock market in your own head. You'll just start thinking, okay, for me, it's I'm never going to buy at all-time highs. I'm not going to wait too long when I find a good opportunity. I'm going to buy on red days, or just random little things like that. And you kind of create a method or a plan, and then you kind of need to stick to your plan once you've set it. Like, I know so many people who have been kicking themselves because they've gotten greedy and they've stopped like using their plan. Like, this goes for any like long-term investors, day traders, momentum traders, like anything. You gotta like set your method and stick to it. I know people who would open one trade a day. That was their thing, and they would close it before market close. And if they made money, great. They lost it, oh well, they didn't lose too much because it was only open for that one day. And then they started in the huge bull market we're having just over a month ago, really. They started opening 3 trades a day, which was close to like a third of their portfolio in that specific account. A third of that account. And when the market kind of downturned, they got hit huge because they also, I believe they kept their position open past market close, which is like another thing. They had broken their method. So they lost out because they got a little bit greedy and wanted to do better. Like, of course we all want to do better than we're doing, but you got to set a method and stick to it. Like, if you can set your method and then it goes badly, at least you know, like, yep, that's my method. I have a plan to get out of this, or a plan to like make the best of the situation, or not to lose crazy amounts of money from the situation. You need to have that method. Like, if you cut your losses at 20% or 10% or whatever, just stick to that, because the one time that you let it go past that and you end up with like 50-60% losses, you're going to be so gutted, and you're going to be kicking yourself and like, I should have stuck to my method. But then at that point, you've just got to accept, like, I might miss out on potential gains, but I'm also going to miss out on potential losses as well. So stick to your methods. Diamond Hands had to use the expression. So this is kind of like the opposite of the previous, like, don't buy at all-time highs, don't sell at all-time lows. If you have high conviction in a stock, you shouldn't sell it. Even if, like, NIO recently, NIO came out with the shortage of chips, microchips, is causing them to have 5 days worth of zero production, and it's going to put their numbers down like 1,000 or 1,500 vehicles for the quarter, and the stock went down 10% on that news at an intraday low of 10% down. And like, why would people sell that if they had high conviction in that stock? If you believe it's going to double in a year or 2 years, why would you sell it for 5 days? 5 days of zero production. Like, cool. 5 days they're going to close their factory. Like, a year is 365 days long. Just leave it, you know. Leave your stocks there. Don't sell them. Don't sell them over small news and stuff. If there's like huge news, like there was with A2, and they had huge supply issues, like, yeah, it's easier to see that retrospectively, but if you think the news is like that, like what happened to A2, or what happened to Nikola, like investigated for fraud, and like, I mean, to me that one was fairly obvious, so that's not like a hindsight one. That's like, Nikola came out, that was clearly, that was dodgy, there was fraud going on. Like, if something like that came out, yep, sell at a loss if you have to. But yeah, if you have high conviction in the stock, you should be holding it long term. Don't buy low conviction stocks. Yeah, you know, I've talked about it in my other videos. I have bought a few stocks just to have like exposure to a sector, and yeah, it's not a great idea. Don't do it. Do your research and actually stick to the stocks you have high conviction in. Otherwise, you'll be like me with Workhorse dragging you down by 50%, Tilray down about 30%, I think. A couple others in there. Yeah. Your time is your advantage, so be patient. If you have a high conviction stock and it goes down in the short term, just wait. be patient. If you have like conviction in it, then you shouldn't feel too bad about holding it. In fact, you can get more money in there while it's low, and if you've done your research properly and like it is a good stock, then there's a high likelihood that over time it'll go up again. So yeah, just wait it out, be patient. Time is your advantage. Continue to invest. So you always hear people say invest what you can afford to lose, and I mean personally I've always thought like, damn, I'm not prepared to lose this money. But what I would say is only invest money that you're prepared to be without for 5 to 10 years. Like if my 48.5 grand that I have in the stock market, if that was just locked there and I couldn't access it for the next 5 to 10 years, like I'm not gonna go bankrupt. I'm not gonna be without a house or anything. I'm gonna be able to continue to live, you know. So like yeah, invest what you can afford to be without for an extended period of time. If you have to like pull money out because your WAF came up with a few issues or something, like you're not going to be at a good advantage in the stock market because time's not on your side if you have to pull it out at short notice. So yeah, invest when you have the money. So like if you get like a bonus from work or something, you've got some money, and put it into the stock market. Don't go spend it on a fridge or spend it on takeaways. Don't just be like, oh, this is my my treat that I've earned or whatever. The stocks are your treat. Come on, we love stocks. Invest the money when you have it, and try not to invest it when you don't have it, like what I've been doing. If you can get more money, like you can get a higher income, like I'm trying to do, then you can invest more money when you have it. And don't wait too long to invest the money. Just find the best opportunity you can find at that time. Don't wait forever. And always do your research and be confident in your research that you've done. Like if you do a whole heap of research on a stock and you decide like, yes, this is a good stock, this is good value, I'm going to buy it, stick with that. Maintain that confidence. If it goes down 10%, sweet, that's a deal. I can take some more. I can buy some more of that. And don't let the short-term market fluctuations like dictate what you do with your stocks. And maintain motivation. If you lose your motivation, like you're not going to be willing to put in the research, you're not going to be willing to hold out through a market downturn, it's going to be a bit harder on you. So maintain the motivation. Yeah, there are other methods you can, with no motivation, you can stick like 50k in 5 different stocks you think you're going to do well and then just leave it and not look at it forever. But that's not always the best solution. Like I know people who have put tens of thousands of dollars in A2 milk many years ago, and they were up heaps of money. They bought in when it was sub $10, and then it went to 22, and I had to be the one to tell them that it had gone down because they don't check it. I think the last time they checked it was over $20, and then I had to be the one that tell them I just sold mine at like $10.60, and I believe it's down at $8 now, and they have not sold. And still like they're up money, and it technically did work, and A2 milk could go to the moon from here, who knows. But you can do better when you actively manage your account. That doesn't mean like trading in and out of stocks always, but you got to keep up with the news. I think keep up with the stocks that you own, and just have the knowledge, because knowledge is power, right? If you know what's happening, you can decide whether or not to act. If you don't know what's happening, inaction is all you have, really. You can't do anything if you don't know. Yeah, just remember this is all my own opinion. It's not investing advice. If you talk to other investors, they'll probably say different things. They might have better advice or worse advice. Don't blindly trust anyone in the market. Like, it's tough, I know, when people have like huge returns. Like, I know I do it. If someone has huge returns like that, that alters the way I look at them. I'll like be like, whoa, like I should listen to what this person thinks. But that can play on like your own methods and stuff. Like, I had a method when I first, or not long after I first started out investing. It was just buy stocks that Jeremy from Financial Education says are a good deal. And I strayed from that many times when that was my only kind of the only method that I employed. And I strayed from that a few times and lost money, like missed out on potential gains. Like, I still hold a lot of the stocks that I bought from his videos, and they have done a lot better than my entire portfolio. Like, so yeah, I mean, made some interesting decisions there, but it was also a kind of an odd method that I had. So yeah, don't let other people like affect your opinions and your methods too much. Like, find and make your own opinions and your own methods, and like stick to those methods. Yeah, that's pretty much all I have for this video. Let me know if you like this kind of video, like as opposed to me just showing you guys like what I have. I mean, obviously I'll still do the weekly updates, show you guys how my portfolio is doing, show you that I've still got skin in the game, and then maybe I'll do some more of these kind of like videos that are about the market but not necessarily my portfolio. Like, let me know if you've got any videos that you want me to do, anything you want me to cover, and if it's within my capability, then yeah, I might give it a go. So yeah, thanks for watching. Leave a like, leave a comment, subscribe if you'd like. Thanks for watching. Have a great day. See ya.